Hello, welcome to Boss Capital. So before we talk about the market today, I just want to highlight this news here that, the UK, Japan has slumped into recession while US continue to defy gloomy expectation. This is very interesting news because, last week we saw Japan announce, their GDP and it's actually negative, and now we're seeing UK doing the same thing. Two really big economies in the world, part of G7, and so I'm starting to wonder whether this will continue with other countries like Canada. Perhaps US might be the last one who might go into recession. So just something to be aware of, because I didn't see even much news being talked about other than some of the media. Like, actually, the funny thing, my mom actually tell me, hey, US, Japan went into recession, something is wrong with the economies and stuff. Like, I actually find that so interesting because I didn't even see the CNBC talk about it much, or any analyst talk about it much. But yet, my mom came and tell me about this. So, what does that do to consumer sentiment? We saw retail sales drop quite a bit this week. Again, market did not react to that news. So what I want to say is the market is almost is too happy right now. I would be very cautious of the market right now because of that. It seems to ignore almost all the bad news, except for Tuesday and even Friday. Tuesday, being the CPI report came out, was harder than inflation than expected. And then same thing with Friday. The producer price index was also a little bit more hot than expected, but yet, it did close, towards the end of the day very weak on Friday, which is I always never like to see. So we'll talk more about that on the chart. But I just want to put a word of caution into this because there's things brewing in the macro, and that could eventually hurt the micro in US. So something to pay attention to. Yeah, so it looks like CME futures are, projecting no rate cuts anymore until June. So 5% in June. So March and May will stay the same, and now the rate will will reduce by 0.25. There's some, more and more, even like the Federal Reserve board members came out and say they might even possible push it to like second half, which means July. So that could also happen. So yeah, just beware that this is pushing out later and later, and so don't be surprised that this couldn't cause more pain down the road, right? Because one of the problems that Fed did before was they didn't anticipate inflation, even though the numbers are starting to rise. Now same thing, right? They're not reducing the rates because they're not anticipating the downturn, and so this could have bigger repercussions down the road, and market could react much more later. So the possible two scenarios: either we kind of pull back right now because the market has gone up quite a bit, pull back a little bit, 5 to 7% in the next month or so, or possible it could go up, continue to go up, and more retail investors coming into the market as S&P keep hitting new highs, and then it might top in a month from now, like or two, right? Like we won't know, but we have to follow the market and see what it does. But yeah, this is a big unknown right now, and so it almost seems like again, I don't know which scenario is going to pay out, but it seems like everybody just want to jump into the market right now because things are good. But at the same time, I do see some signs of growth stocks, especially showing signs of top, and so we'll talk about that in a minute on looking at charts. I think the only news we have this week is Wednesday. The Fed meeting minutes will come out, so that's going to be again, there's nothing new that people doesn't know. They're not going to cut rates, in March. So, and I doubt they will say anything about further down the road yet. Initial jobless claims, some existing home sales and manufacturing service PMI. So those might have some movement on the market. But other than that, there's really not much news. And on we'll talk about that a little bit more later, but earnings news really, again, we are getting down to the last, 10% or 15% on S&P. Very little left that hasn't reported. So you gotta ask yourself this question, and I ask myself this question, like, what else could make the market move higher other than just being like euphoric type of stuff, or fear of missing out? Really there's not much going on. Like, like the catalyst slowly, we have earnings propel a lot of stocks higher, but now that the earnings season is winding down, what else could move this market higher, right? So you gotta keep asking yourself that question. It's definitely time to, in my case, I've taken a lot of profit and also cut a lot of holdings. So, because I'm more of a short-term trader. So, that's what I've done. And so, whether the market has topped, we won't know for sure, whether it could be this week already top, or maybe, in another month or so. Hard to say. But, for this market to continue a bullish run this year, I usually market is better off pulling back, 3 to 5 to 7% on the way as it continues to go higher. When it doesn't do that, it usually means a bigger correction down the road. So which case, I don't know. Like, I'd rather it pull back 3 to 5% right now, or even 7%, or it's going to correct 10 or 12 or 15% later. So those are usually the 2-case scenario. The longer it runs, the higher chances it's going to correct more down. So, yeah. So again, not much news this week. So, and not much earnings. There's still lots of earnings coming out, but again, nothing really major. The big one obviously is Nvidia. There's so much, like I think IBD talked about in this newspaper, like there's so much elevated expectation. It's not just high expectations, it's like super expectations, that if they miss, the market could easily correct big time, easily, because of that news. Because there was so much AI hype, and now that the AI hype, if it's over, at least short term, that could really, a lot of growth stock could easily correct 5% or more that day. So just be careful, be cautious of that. And usually, like, I think last year something like that happened, right? Like, where it went up, I think in May or whatever. I can't remember when exactly, but same thing happened, and then a lot of growth stocks corrected. We'll look at some charts and just to pinpoint back when that happened. But yeah, the other thing that's happening as well, I do see some rotation, mostly into more laggard stocks that are coming back up. So again, those are signs like it's not my best. I don't like to trade those stocks as much because they're not the strongest. And again, if the market do top, and usually all the other index will follow. So even if Nasdaq already top, but even S&P making new highs, eventually they will also correct. It's just a matter of time. Usually it takes a week. There might be out of sync for a week or so, or 2 weeks, but eventually they will all go down. And again, I don't know what the news could be that could make the market drop a lot more. Nvidia would be one. Like I say, any macro news and stuff. So far, the market hasn't reacted to the recession news I just talked about earlier, but it's possible that there's just a delay reaction. And when things, when the story change, again, this is one of the things that I've learned about the market. Follow the story. Once the story change and the focus is on a new story, you have to also follow that, right? And so far we've been following the story since the new year, is that hey, the AI is doing well, ARM's going through the moon because of AI stuff, SMCI is going through the moon because of AI stuff, and even Meta, is moving up really nicely because they have invested so much in AI. So all these news are all AI hype, and at some point they're gonna push back because we have went extreme, right? So it has been overbought, and it's got to come back down, and then the story will continue for the next decade in terms of AI. So it's not going to slow down. AI is just only going to get fast. Like, more and more companies are going to adopt AI, but the market doesn't go straight up, right? It will correct. It will pull back. Jim Roper always says it to his members, like, be ready for 8% pullback anytime, because that usually happens once or twice a year. Like, usually twice or even 3 times a year, but then there's a correction of 10% or more at least once a year. So those two things usually happen in a year. So we haven't had any yet this year, so just be cautious. So yeah. Yeah, so the Atlanta Fed GDP has actually dropped quite a bit. It was like 4 point something% earlier for Q1, so since January, and now it has dropped to 2.9%. So it's on a downward momentum. I'm not sure what this means. You can see the blue chip consensus is roughly like closer to 2%. So we'll see what this means like as time goes on. It's still early, like we're only in mid-February. But this is very interesting. So if the market is projecting around slightly lower than 2%, we'll see where this actually end by the end of the quarter. So that's also very important to follow, because I think if this start to drop significantly, then I think they're going to be more worried about this going forward. Sentiment is currently on the CNN Fear Index. It's like at extreme greed level. Again, it's kind of like just staying at this level for a while now. Like it's just been hovering around this area. It doesn't seem to go higher, and it doesn't seem to go much lower. It's just been stuck in this, pretty much near the highs. So yeah, again, lots of greed right now. I will be cautious. And then the bullish sentiment here on AAII also. Okay, it did drop a little bit this week, probably because of Tuesday. So this is reported on Wednesday, so that makes sense. And then the bearishness jumped back up a little bit. So I still feel like this market breadth has been very narrow since the beginning of the year, but it has expanded in the last week. It's funny enough, I feel like the market has expanded in the breadth, and mostly due to earnings. But here's the thing, right? Like so many. Like when I track the earnings, a lot of companies are performing a lot worse. Like the ones that do bad are actually performing so bad. And then the ones that are doing good, they're doing all right. But I just feel like there's way more companies doing bad than good. So from that perspective, I'm not feeling too bullish in that sense. So it's still a stock picker's market, meaning like you have to buy the right stock. You just can't, if their earnings not good, they're gonna get shut down big time. So it's not like, oh, I'm gonna buy any stock in the sector and it's gonna do well. No. So the broad rally is still not happening yet. And we'll talk more about small cap like Russell. It's still stuck in the 2000 zone. So that explains the problem there. Again, these are same notes as last week. More stocks are extended. We're seeing climax run. Definitely the big story was SMCI this week, going to 1,000. And then on Friday it dropped 20%. Like I don't want to say I saw it coming, but when you hit a round number like 1,000, it tends to happen around those round numbers, and that's why when S&P hit 5,000, it's the same thing. Is that there's that concept that it could reverse eventually, and have a big pullback. And because usually history shows that when you hit a round number, it tends to pull back, like to give it a big test. Because when you hit a round number, a lot of people jump into that stock or the index, stuff like that. Definitely have been raising stops. I've actually trimmed a lot as well, taking profit, tightened my stops so tight that I get shaking out of some really good stuff. It's okay. Like I'm okay where I'm at. And that's one thing that I've learned, right? Based on my experience. It's okay to sell out earlier. I saw SMCI on, I can't remember, Wednesday, I believe, morning. But it didn't peak until Friday morning, right? So, it's okay. Like it will never catch the top. And even after you saw it, don't like, hey, I need to jump back in, because, it takes time. When the stock, yes, it might not top at that moment. Maybe it top another month, in another month, who knows, right? Like maybe this is just a smaller pullback. It's possible, but I've learned, the reward and risk level is not there no more, right? Because it has gone up so much. So now it has a higher potential to drop more than going higher, right? So it's not worth it, the reward risk level. That's why you need to think about that. Yes, you know, it could go up even more and more and more. Yes, it can happen. But so that's why it's good to pay attention to all the leading growth stocks, because when they do top, it's not one or two stocks top. It's not just SMCI. You should see a lot of growth stocks top. And when that happens, you know, that's a big sign that you need to get out, because either you know, unless you have a big cushion and you're willing to let the stock drop 20, 30, or even more %, you know, it's very hard to stomach that correction, right? So something to pay attention to. But in terms of news this week, Tuesday, yes, markets dropped. You know, yield jumped 4.28%. Oil has been jumping, very interesting. The CPI really shocked everyone. Like, it rose 0.3% versus on the month, and the annual increase of 3.1% versus the 0.2% expected and 3% yearly increase. So it was harder than expected. And then the core CPI was 3.9%. Yeah, also harder than expected, because it was expected at 3.7. So you can see here, core CPI is at 0.4. The regular CPI is at 0.3. So both of them higher than any in the last 3 months. And, you know, overall the yearly trend, even though it's higher than expected, it's still, you know, on a, you know, little bit, it's still on a big, mostly downtrend. So that's the good news right here. But, you know, so this 1 month of data, you know, of course the market like kind of got sold out that day big time. But if another month of data come in harder than expected, then I think market will be very worried, right? Because one month of data doesn't make a trend, but 2 months of data will really be a little bit more worrisome. So we'll see, and that, you know, and that could spark, you know, the sell-off, right? Like, I don't know what could spark the sell-off, but that's a big potential. And then retail sales was really, you know, again, market didn't react to this on Thursday, but, you know, you see how the retail sales total dropped 0.8%, and I guess the one excluding autos and gasoline dropped 0.5%. So very big drop. Again, this is very bad sign for the economy. Something to really, you know, be cautious about, because the market, if it does change the tune about more worry about the economy, then this could spark the sell-off going forward. So on Wednesday, we'll look at this XLI hit new high. So let's just jump to it right now. So that's the industrial ETF. So Wednesday right here, you can see industrials are really picking up. So on Wednesday hit a new high despite a big drop on Tuesday. So that's a huge reversal. So this is some of the rotation that I'm seeing happening. And then Thursday continue, and then Friday it did close off pretty weak. So, but that's after a strong rebound, right? So that's probably okay, but we'll see. But it seems like there's some sort of rotation happening in the industrial sector. And look at how this trend has been going. It's pretty strong trend here on the slope side, on the 10-day moving average. That's a 45-degree angle, and so definitely something's happening there. So something to pay attention to. So, you know, again, I don't know what's going to happen going forward, whether the tech stocks will correct, pull back, and then some other stocks will take the lead, like industrials. It's possible. You know, we've seen that happen before. So you know, so yeah, you could, you know, move from, like, you know, some of the tech growth stocks to some of the industrials area. That's possible. Like, you know, how you want to pursue that is up to you. But, you know, again, this is happening. So I just want to point that out. In general, the Nasdaq did gain back Tuesday's loss, half of the losses. So that was a good sign. But one thing came out was among bullishness amongst newsletter editors jumped to a 30-month high at 58%. So 30-month high, that's impressive. So again, this is according to Investors Intelligence. So I would be very cautious in terms of, like, you know, when there's so many people out there being so bullish, usually that is the top. So here's some stats here. The low levels lower levels of bears. Right now it's at 17%. The lowest level is near 18% July, August 2023. So we are actually even lower than that, slightly. And then also like 2021 bottom, we also have like a 15.3% bearishness. So when the lower it goes, the higher chance that is the top. And then yeah. So that's what the headline was about. On Thursday, not much news, just the jobless claims fell a little bit, more than expected. And then on Friday, the producer price index rose more than expected. So 0.3 versus 0.1. Annually, it was 0.9 versus 0.7. So even the core was also much higher, 0.5 versus 0.1. And annual core is 2 versus 0.7. So again, hot inflation numbers. So we see the consumer side is going up. We see the producers going up. Very interesting, something to pay attention to. Perhaps probably the most attention we should look at is the yield has reacted quite significantly. And we were talking about that last week, how it was kind of just hovering around these highs, right? And eventually you see on Tuesday was the day the market sold off on the CPI, and look at it, it just powered through. And then it did pull back to the 10-day. So here's the 10-day slope now. This is very concerning now, right? And it continued to make new high even on Friday slightly. It did close lower, but it's still overall pretty strong. So the slope is a new uptrend has started. It broke the downtrend. It has confirmed it by falling through to above this area. So this could mean harder times for especially the growth stocks area. Something to pay attention to. Talking about growth stocks, let's just jump to IBD index right away. This index is really strong. I think Tuesday it corrected. You see it pulled back to 10-day. So this is the 10-day slope right now. And Wednesday it bounced, and then Thursday it made a new high, and then Friday it reversed quite significantly. So again, we'll have to watch this very closely, because because this is the leading indicator of the growth stocks on IBD. If this falls apart, and this was like what you call a trap, a bull trap, that could be a big problem, So like it could go as far back as like 50 days. This is where the 50-day line is right now, around here. So that's going to be a significant correction. That's like, yeah, 5 to 10% there on the index. We'll see. So just something to be aware of. Like, I don't know if this is a bull trap, but it looks like one. It's possible, because just the way it closed on Friday really worries me, because like it make good reaction, but then we'll see. Like ultimately, so one of the things I want to talk about is Tuesday's low, because that is such a bad day. That low should be a support level on any stock you buy right now. Like I would put your stop loss at that low. If it falls through that low on any of your stocks on Tuesday, that's the day you have to get out, because that just confirmed that this downtrend has started. That's my take on that. Yeah, the US dollar just is still on an uptrend. It's not moving at a fast pace, but it is slowly moving up. So it's just sticking around. It's not overall the downtrend is still intact. Very interesting. So we are at a crossroad right now. You can see that. And then, but USO, the oil price has really took, yeah, it has really took off this one. It broke the downtrend right here, and it's now making new highs on Friday. So this is definitely worrisome for inflation, because if it's continued to move up, there's no doubt inflation is going to go up, and so that's another worrisome sign for the stock market. Yeah, so we'll have to keep watching that. I don't follow many stocks on the oil side right now, but maybe I should. But if the oil is going to go higher, the only stock I have is Weatherford. Yeah, so this is in a very long-term base. It was has this nice run here, You know, it has a significant correction here, and it has bounced since and holding pretty tight, and now it's getting really close to breakout zone. So this definitely is a leading stock, 90 relative strength. If it does break out, it might be a big move, and I would expect the same thing would be the oil price would break out. Like, you know, it will spark a lot of stocks breaking out. So I would pay attention to this. I did hear some IB traders also talking about this, that, you know, they've been basing for a while now. It's been, you know, not doing much, and now they're maybe ready to take off. So and they tend to do well. Oil stocks tend to do well between this time and May. Usually oil peak around May, or, you know, sometime in May, or even a little bit slightly later, like early June, but usually in May. So they could have a good run if this is gonna happen. So something to pay attention to. So equal weight S&P is doing good. This is probably the only index, I mean S&P in general, and also equal weight, they're making new highs, right? As you can see here, Friday it didn't, but it didn't close like that week as well. It's like middle of Thursday's range. If I go to S&P, the market weighted, market cap weighted, if we go S&P 500. So this one didn't confirm a new high on Thursday, so that's interesting. So it shows that. So what does it say? That means that the heavy weighted market cap are actually performing worse than the, you know, and I think there's like what, 6 or 7 stocks in S&P that are very heavily weighted, right? So whereas the other 97 stocks are not, I mean the 497, 93 stocks are not doing as well, are doing much better than the 7. So yeah, and then we look at QQEW. Let's see how this is performing. As it didn't confirm a new high as well on Thursday, but that's okay. I think the Nasdaq is also doing the same thing. So that, yeah, you can see Thursday is not even close, right? So I do want to talk about Nasdaq for a little bit. Again, this is the leading index in terms of growth stocks generally. If this thing top, most growth stocks will follow. You can see the trend line right now on the bottom channel. If it does undercut this, I think we have no way knowing where it will go. Whether it will go to 50 days is most likely the next support area. So pay attention to that. Yeah, but I don't like this chart right now. It's telling me this rebound is just a temporary rebound. The trend is still has started for the downtrend, right? So you know, pay attention to that channel line there. It's possible Nasdaq has topped, at least short term. With Dow, it didn't make a new high on Thursday. And again, you know, this one looking slightly better, but still, it's you know, the only way we will confirm the market is still in good condition is that it has to make new highs, and we'll see if that happens. So overall, it's not super bearish yet, you know, but there is signs of tops here, and we saw that selling on Tuesday. So again, the Tuesday like lows are very important. We go back to Nasdaq. Where is that low? So the low is right here on Tuesday. If we undercut that, I think that's a very technical bearish sign, and a lot of stop loss will hit. That's probably where a lot of people set the stop loss. So the closer it gets to it, I would be like, you know, be ready for a big sell-off, because if it undercuts this, I don't think it will just go down a little bit. It's gonna go down quite a bit. So because everybody set their stop loss there. On the Russell side, Russell was showing very, you know, I would say overall, like, this is the strongest index. I think on the weekly chart, it's the only one that was green. If we go to Nasdaq, yeah, it's red, right? So yeah, so we're on the 16 weeks now, and we have a down week on this rally, and then we have S&P also down, although it did close in the upper range. So that one still look, like I said, this is the strongest one right now, index of all. Dow also closed near the top as well. And like I said, Russell is the only one that's green this week, which is very strong. If you didn't look at the daily chart, this looks like perfect, right? Like, in fact, this is the channel line here, the upper resistance level. So now the first time it went above it, it reversed and it fell to 50-day. Now it went above it again this week. So we'll see if it holds. The chances are it probably will work this time. I don't know. I'm just guessing. But if that's why I'm saying, is Nasdaq top? And again, that's a big assumption. If it does go down, can Russell go up? That's the big question. That's my thinking, right? It could, because if there's enough stocks that, again, even though these are all the beaten up stocks, and they are coming up, it's possible that Russell could take over the leadership. And a lot of people have been anticipating that, in fact, for this year. So because they've been underperforming last year so badly, that this year, I think Tom Lee is like, they could be up 50% this year. And that's what he calls for. So don't be surprised if this is truly a breakout, that this thing can move. Because it's, it's so far away from the highs, right? Whereas all the other index are, near new highs or at the highs. So this guy could play catch up, right? So yeah, I don't want to discount them, even though they're laggards, but that's why I'm still holding stocks, and I bought into some of those, but I'm not heavily invested in those stocks. But I want to. But again, I'm worried that Nasdaq will drag everything down. So we'll see. As time goes on, we'll have better sense whether these stocks will go up. Right now, it's still hard to tell. Definitely, the high right here for sure would be a very good indication, which is 2071 right here. We came very close to it, but that's why Friday not a good day, because it reversed. But one day of reverse doesn't mean much. The one thing I want to show on this chart that's very interesting is how it closes. So here you see, close at the top, close at the top, close at the top. Even the down day on Tuesday close at the top. Wednesday close at the top. Thursday close at the top. Friday is the only day that's an inside day, right? So, and it closed at the bottom. But an inside J doesn't usually mean much, because you just don't know enough what's going to happen. Really matters more about what happened after that, But yeah, I would watch this. The only reason I'm a little bit skeptical about this is because why did it happen now? Why didn't it happen a week or 2 weeks earlier when the Nasdaq was still going? Why happen right now when Nasdaq is kind of showing topping signs? That's the only reason I'm skeptical. And there's some people saying on Friday, I heard on CNBC, the reason why this index is so strong is because SMCI, which is part of the small cap index, it actually took up a lot of the winnings or something. So I don't know. So that's something that someone brought up. Maybe it's true, and even if it's true, so you have to kind of ask yourself, the SMCI really bring this index up, but all by itself? Again, I don't know enough to say. All right, so yeah, so Russell, whether it's truly gonna take over the leadership, I don't know. I'm a little bit skeptical. Watch for Tuesday's low. This Tuesday's low is very far from Friday's, Thursday's close. It's amazing how this index can move so quickly, and it's just incredible speed. Like, that's an incredible rebound. And so I am optimistic in that sense, but I'm just skeptical whether it can take the leadership without Nasdaq, especially if Nasdaq is pulling back. If it's going sideways, yes. If Nasdaq is going sideways for the next month, and Russell decide to break out, then yeah, definitely go for those stocks, because maybe they will take over the leadership. Because a lot of analysts like Tom Lee, Jeremy Siegel, Ed Yardini, those are the bullish guys that believe that this year the small caps will outperform, and not just by little, by a lot. So you don't want to miss this train, because if those smaller cap guys are going to move, they're going to run the fastest, because they're so small to begin with, right? And so you could have huge gains. So you don't want to miss that opportunity. Like you could make your 20% very easily on any stock because they're so small. When they jump very fast. So either you can make 50% too, like just like what they say. So I don't want to miss that train. I'm just gonna tip my toe in them as this if this rotation continues, and go and see how it plays out. So this week, based on the accumulation distribution, we see like the stocks are pretty heavily accumulated, which is very interesting. Because we know Nasdaq didn't make a new high, but we did see S&P make a new high, and Russell also make a new high this week, and Dow also make a new high this week. So yeah, and then we can see like so here we go. We can see that at the beginning of the week, almost every sector got accumulated. And then Tuesday, you can see the sales was humongous, and I think some of the smaller regional banks got hit hard on Tuesday because of the interest rate expectation, right? And then you can see Wednesday, it picked back up a little bit. Commodities were still weak, and then Thursday, it definitely came back up a lot. In some cases, it was even higher than Monday's. And financial rebound back really strongly. Industrials also. And then by Friday's close, you can see techs actually slow down quite a bit. And industrial still leading and financial still leading. So you can see some of those areas. Trends decline line, S&P is doing pretty good. I would say it's on the uptrend now. So again, we know S&P have a new high close on Thursday. Let me just double check that. I believe it is a new high close. I just want to double check because that's a important sign. Okay, maybe it's so close I couldn't tell. 5,030. Okay, yeah, 5,032. So it did have a new high close. But again, Friday's reversal is a little bit red flag there. So again, we'll have to see how next week will play out, especially when there's not much economic news, and earnings is really winding down. So we'll see how that goes. But yeah, the advanced decline line looks healthy right now. So let's hope that will continue. The Nasdaq one also looks slightly better. At least it make a new high on Thursday as well. So both of them are doing pretty healthy. Accumulation according to IBD is B, so not bad. Dow Jones B plus. So yeah, overall it's still healthy, the indexes, but we have to be cautious. So this is the SMH, which is one of the leading sectors, and overall the uptrend is very strong. Whether it has top short term, I don't know. But this week we saw 4 out of 5 days are red, and then because Monday and Tuesday's range are pretty big, right? And then now we could close pretty much in the middle. So where it goes from here will be very telltale sign. Let's look at software and ETF, very similar. Now you can see here the ETF, software ETF is very close on the week. It's much lower. So this is very negative. And so we might as well jump to it right now. I think Microsoft is on a downtrend. You can see, let me just take away my markups for a second. You can see it's staying under the 10-day 4 days in a row. It's at the 21-day pink line. Like if this drops, it's just gonna go straight to 50 most likely. So this is Microsoft. Don't look at it. Okay, let's jump to Nvidia. So this is one of the chip guys, leading chip guys. We know the big earnings coming out, expectations super high. Like I almost think that it's so high, even if they beat and raise guidance, that maybe the price already been priced in, right? I don't know. So yeah, it's possible, and maybe it might not even react much on the earnings. It's possible. So that's my thinking. It's just too much anticipation of what could happen. When you anticipate so much could happen, usually it doesn't happen. Nothing happens. So it's possible it might be flat. So again, this is in the middle of the range, so it still looks really healthy from a chart perspective. But yeah, so the 10-day, the 10-day slope is still pretty healthy as well. So yeah, so that's that one. Let's look at Google. So you can see Google is on a downtrend now, not looking very healthy. RS line also dropping pretty fast. Oh, it even broke 50-day on Friday. Closed at the under 50 days. That's always a bad sign. Yeah. Anyhow, I'll leave it at that. Amazon, 10-day support. Again, look at the one chart pattern I say this week. Look at your stocks is Mondays, Tuesdays range, and look where it closed. And this is at the bottom of the range, right near the bottom. And I would say, whatever, like if you a short-term trader like me, I'm using Tuesday stop for any stock I have right now. If not even higher. But but I would say that is like if it fell Tuesday's low, then that means the downtrend is confirmed. So Meta is really strong. It did have a higher close on Thursday, but again Friday it reversed. Like the Friday reversal is very negative to me. Yeah, it's very negative for me, like in my opinion. So because we have such a good Thursday, Wednesday rebound, and then Friday, like this one, like it closed even lower than the low on Thursday. So it might not look like much on this chart, but it's just that little detail that tells me something not right. Why would you give up all those gains on Thursday just like that? So yeah, so that's that. So those are the AI 5. People call them now. Let's look at Apple again. News came out. Buffett has unloaded some like 1% or something of Apple shares. But the stock did not react well this week. Like you can see, it just like we are near the lows almost. So yeah, don't look good. Now the Tesla is surprising to me. Even some people I know brought this to my attention. It has broken the downtrend. I don't even know if there's any news on Thursday, but that's a pretty nice. I can see.
Yeah. There was a small news, which is basically Elon Musk in his 13G, he put that he has close to 20% stake now.
Oh yes, that was the news. So that was I guess that gives him more control. He wants, I think, 25%, right? So eventually he'll buy up more shares. So that probably the reason why, yeah. So this is a nice round bottom. Very flat, very tight. Usually those bottoms are nice like this, right? Like nice bottom, nice round bottom. So this Thursday's move is really healthy, and then Friday's move, look at that. It didn't even want to give back much, so very strong. Yeah. So I think this is probably have a chance. We'll see how it reacts at the 50-day. Like it's probably gonna go to 50-day. And if past that, then there's a 200-day. So yeah, those are the two trend lines. Okay, so that's that. So this week, at the top here, new high list. So I just removed some columns here. Anyhow, so yeah, here's all the new high RS for this week. There's probably a few more somewhere. I just haven't gone through all of them, but I just want to show you what's on this list. So we have XPO, transportation, industrial, CLB. Again, a lot of small caps coming on this list. CLBT, and most of them because of earnings came out better than expected, and they all jumped. So these are the newer names on my list. This one is technology, CLBT, enterprise. Lilly's continue to run. Infomedica, Also in technology space, software. Shack. A lot of these are extended. You can see I put down the word extended here. So they continue to make new high. SLG, property REIT. CRBG, insurance life. Again, Celsius. We probably want to look at that chart. Rico, semiconductor. Again, another health stock, NVO. So those two stocks are still running, Lilly and NVO. PSN. So again, there's still some enterprise software going up. SKWD. So you can see there's quite a few insurance here. SKWD, PGR, KNSL, MFC. This Toast. That one's not insurance. PRI. We have Texas Roadhouse reported, also doing really well. NG, Internet Connect Content. PCore continues to do well. ANIP, Medical, Triple V, MSA Security. So this probably the stock of the week is SMCI. You can see it started out right here on Monday. Let me draw the highlight here. Monday, Tuesday, it closed higher, and then this is where the gap up start happening. Wednesday, Thursday, and Friday it also gap up, but it reversed. And look at that drop, 20% almost. So this is what I think quite a lot of people tweeted, including David Ryan. This is a classic climax top, which includes highest volume, right? Also, largest 1 day range. Also, the gap ups right here.
Yeah, those are getting filled.
So those are really strong signs of climax top. So a lot of people got out, like a lot of them timed perfectly. Thursday, I was a little bit earlier. I was Wednesday, but Friday morning is the if you go to 15-minute chart here, Friday morning here's the gap up. This is your last chance to get out. And look at the third bar here on the half an hour later. Like it just it just dropped like a tank. So I don't know who it is, but someone's it just basically triggered all the stops here. So that one bar triggered lots of stops. This is exactly why tops are so crazy, because that's where a lot of people set their stops, and it get triggered one after another, right? Because everyone wants to protect their profit, so they'll set the stop here, the stop here, the stop here, and look at where it closed, right? Yeah. Basically the last 2 days of support right here. And if you drop these 2 days of support, then it keep going, and then you can see, you have no idea how far this will go. It could drop to 21 day on Monday. You don't know that, because that's the thing. When it triggers those stops, like people who hasn't sold, they're starting to, if they, even the ones, because these are this stock can move so fast. If you haven't sold yet, you definitely will be putting a stop loss somewhere. And that, if those get triggered, it's just going to spiral down really fast. So, obviously ARM make a few day run. Like this one, I don't like this chart at all, right? Like even though it ran well, at least SMCI, it runs more than 10 days in a row, right? This stock, it literally only ran for like 1 day and 2 days here. That's it. If you missed those 2 days, you really didn't make much, And then right now it's basically if you look at this range, it's in the middle almost, right? So we'll see the 10 days catching up. It is looking very nice because it is not coming close to 10 day. So we'll see what happens as this get closer. Will it bounce off, or will it break this and go back down? And the next support line is 21 day, which is this slope here. So something to watch out for. Again, I've said this many times probably, I believe David Ryan called this on when he tweeted out not only SMCI is a climax top, he believed the whole sector is top. So that will include ARM, NVIDIA, and SMCI, right? But obviously, NVIDIA still have earnings to showcase, so no one knows what the outcome is, so we'll see. But yeah, I would be careful of this. The one stock I heard about a few times, Adobe. Yes, this is really bad.
Hammered.
It was some competitive news, right? Something like that.
But OpenAI launched the Sora. That's
launch what?
OpenAI launched text to video. Sora.
Okay.
It's called Sora. So that's the reason.
Okay.
And they have competitive product. Yeah.
Interesting. So, like this is a very heavily institution stock. Like it has always find support at the 50-day. The fact that it fell like this, like it undercuts everything in the last 2 months. Like this is very scary stuff, and this is something that could happen in the next month, right? If the growth stock starts to correct, this is the kind of stuff that's going to happen. And I just want to bring this up as an example because I would never expect a stock like Adobe to drop like this. Just because it has so many institutions support this guy. And so I would be very cautious going forward. Like this is a good example of what could happen when things start to go south. Things are going to correct much faster than anyone anticipates. So if you plan to hold on, don't think that stocks will, drop slowly for you so you can react. It could be a one-day 10-20% drop is what I'm trying to say.
Mm-hmm.
So you could easily give up all your gains. And look at this one. It went back below the previous base buy point. That's how fast this thing unwound. Like, just crazy. Yeah, I think this is a good example of what can happen if Nasdaq truly is tough. Pick any stock you want to chat about, but I'll just go through this list. Like, a lot of stocks are extended. Like I say last week, if you haven't, you should start drawing up a channel line and see where, like this guy Powell. I'll put on my markup just so you can see. Like I draw an upper channel line, and I selling every time it touches the upper channel line, and it could go higher. I don't know how much higher it could go, but it's very strong. So here's the thing, and one thing I've learned is that if you don't sell at the highs, then you have to be prepared at selling at the lows, which is the lower channel line is probably closer to the 10-day, and you give up quite a bit, right? Like depending on how extended. This is not that extended from the 10-day, but some stocks are like like if we go back to SMCI, and this is what I'm kind of trying to say, right? Like if you didn't, where's the 10-day right here? So this is the 10-day line right here, level. If you see, it didn't even touch the 10-day, but how much do you give up, right? You give up, 20% from this level right here, 1,000. This is almost 800. So, yeah, like when it's extended from the 10-day, if you didn't take your profit and you didn't sell into strength, and then you want to play a defensive and you put your stop at the 10-day, like it's hard because you're gonna give back so much, right? So that's why I'm always, when it extended and it's above the upper channel line, you should always take profit because it's when it falls so fast you don't have time to react. So Powell, like right now, is starting to, it didn't drop big or anything. So, but like I said, you don't know, right? Like it could drop big all of a sudden, and yeah. So I would be cautious about that. But okay, let's look at Mara. So obviously all the crypto stocks have started to pull back, and it's a very fast move as well. I don't want to say it might not look much on the chart because of how fast it moved up, but I mean I think Thursday drop was let's see here, 8%, and then Friday it didn't close much down, but but it's still closed like quite low, like away far from the top here on the high. So 2 days now it closed at the bottom. So I'm really worried about this. Yeah, I hope there's no gap down because you can see Like I did put a line here. I'm pretty sure that's where my stop is. So we'll see what happens. But I have been selling as it goes higher. Like you see the arrow here. Those are my trends there. But it could go up higher. Like this is again, I don't want to say it won't go up higher. Like because there is a high chance actually. I think crypto will go higher. Because they're mostly in the base. It's natural that it comes to the previous high and pull back, and so it did that. So the next thing I want to see is does it actually bounce off this 10-day as it catch up. So that's what I'm looking at. Coinbase is probably the most lagged one, but it's still doing well because of the earnings. So here you go. It broke out on Friday due to earnings. This one looks a lot better. It started out slow, but now it has caught up, right? Again,
yeah.
Friday's reversal is bad, but at least for this stock, again, where is the 10-day? Right? It still looks pretty healthy. Even if it does pull back a little bit more, it still look healthy. So it's possible these guys still have more room to run. But again, I really believe, if Nasdaq top, I think these guys will top too. So it really depends what Nasdaq going to do, I feel. Usually they don't act out too far away from Nasdaq, but let's see. I don't know. I could be wrong this time. So that's that. Any other crypto you want to look at? Is that good for now? There's
CLS.
Okay. So this is MSTR also reverse. CLSK. Please boy.
Yeah.
Okay. I don't follow this stock, but yeah, it's definitely like moving pretty good. Yeah, it looks really healthy, this one. Yeah, really strong. This is like a 70-degree angle slope. Yeah. So yeah, I can't remember. This this is Bitcoin too, right? Yeah, okay.
Yeah, Bitcoin miner.
Yeah. So they're really strong. Let me just look at GPTC. I just want to see what is that. Yeah, look at this, really tight. Wow, this is so tight. I'm surprised how tight that is. Yeah, this looks so healthy. Look at that. It just doesn't want to give back, right? So, yeah. Like whatever this is doing, those stocks going to react, twice as much or more. So, the fact that this is holding is a really good sign. It's waiting for the 10-day to catch up. Yeah, I think this might go higher. Most likely. It's just based on the look of this. I just don't feel like it looks like anywhere near the top. It's reacting really well. So, looking good. Yeah. So the cryptos are one of the few that are still doing really well. Yeah. So GCT, continue to react well. It's extended as well. Like if you look at the chart, I don't own this. But if you do own it, like you can see, it has really extended. It's starting to do climax run. It hasn't gap up yet, but if it does, those are probably your sell signal as well. VRT, again, a lot of these stocks, like these are the leaders, and again, the one thing I have to keep telling myself is how it's reacting according to Tuesday's low and Monday's high, and it did make a new high on Wednesday. It's at the upper range, looks really good. It's still holding strong. Mod, look at this guy, continue to run. It's like the market doesn't even care about the market, right? So it's like this is like industrial kind of stuff, commercial. So following that's still really strong. Yeah. I was gonna jump back to Liddy and NMO for a second. That was on the top of the list. I forgot to talk about. Yeah, so you can see it broke the upper channel line. So it could go up higher. So yeah, and then NMO is catching up as well. So looking good. Yeah, starting to get there. Extend as well. Let's talk about Palantir. I heard some people talk about it Friday. Yeah, this is holding really tight. I still have position in this. Like this is a right here. It didn't want to touch the 10-day. Really healthy. The slope is pretty strong. It just broke out not that long ago, right? So it might still have some more room to run. Yeah, which is really unusual. Like the stocks that hasn't taken part in the recent rally, like look at this space, right? This is one of them. The other one that's pop up, Celsius, same thing. Hasn't really performed, like, and then all of a sudden it pop out, right? So, let me look at race. I think that was another one highlight by IBD. Yeah, here you go. See, it hasn't really performed much, and then all of a sudden it's starting to move. Even PDD, I'm gonna jump to PDD very quickly here. It kind of corrected, and look at it now. It's moving up. The volume isn't there, so that I would be cautious about that. But here comes the 50-day. We'll see what it does. So a lot of the names that didn't participate in January is now starting to come out, which is very interesting. Some Chinese stocks are starting to come back a little bit. So this one also building a base, and now it's come out. So very interesting. That's why not all leadership are dead, because these are previous leaders. It just didn't participate in January, but now it's starting to participate, which is very interesting. So I don't know what this means as well. Yeah, so you can see RS rating is really high. Yeah, there was some news here? Like it was a big gap up.
Yeah, no, that I remember.
Yeah. Anyhow, it's definitely extended. Yeah, this is like super strong. Like this is probably one of the strongest stocks. That reminds me. Let me look at the securities one. CrowdStrike. Yeah, this one. Oh, this chart. This chart looks scary because this is what they call IBD identified this as a railway track. When you have two when the track two identical close at the top but near each other, that is a sign of exhaustion, they call it. Doesn't happen often. This is interesting. So yeah, just something to be aware of. So this is still, again, looks really good, but IBD has studied this before, and they say a railway track pattern is usually a negative. So beware of this. This guy has run a lot. It's one of the strongest run as well. So, oh yeah, Palo Alto is also reporting Tuesday, so that will make a big move on the security stocks. It looks good on the weekly chart. Let's go to daily. Yeah, I mean, this is not a super fast mover like CrowdStrike, but it does move, and it is somewhat extended right now. Yeah, a lot of the leading stocks are all extended. Like, I mean, look at Spotify for them. Spotify. Yeah. Okay, so this guy just hit the 20% mark. So the two stocks that I did well this week, one was App, from earnings, obviously. Again, I don't know what's gonna happen after earnings, right? Like, these stocks they just came out and they moved so much, 20% or so on that day. Like, it's a big movement, and once they move, I mean, Friday it did fall through. So you don't know where it's gonna stop, but like it's just hard to, like, every stock that has gone. It's almost like a digestion period will be coming. Sure, it could move another 5-10% or whatever, but there's, again, the reward and risk level is starting to diminish and look bad, right? So I just want to cautious on that. Fraud was another one. This one really did really well. It has a pullback before the earnings, which was interesting. Reminds me of SMCI. But yeah, you can tell this is extended. Friday was a big reversal as well, so that doesn't look good. You see where my stop is. Yeah, it is what it is. So, oh yeah, I want to talk about this one. MEDP. Again, there's some medical stocks are doing well as well. Like, this is another one, super tight at the top. Yeah, this is definitely extended. You can see like a long trend line there. So almost every stock that has run. So you can see all these words here, extended, you know, like, so yeah, if you again, if you miss this, guys, I wouldn't get in now. It's a little bit late in the game. Even Ralph Lauren came up quite a bit on earnings. Fix PDD. Oh, okay, Apollo. This is mini stock. We talked about it before. Let me see. Why is it not working? So it looks like this one again. Sometimes when the stock drop is one thing, the rebound is probably how it reacts after that is very important, and it just doesn't have power. Look at that. It just doesn't. It closed near the bottom of the range on the week. So it's probably better to look at weekly chart. You can see it just at the bottom. Not a good sign. Yeah. So I guess the last note I want to make is I'm just looking at technology right now, because that's the one area I feel like is lagging big time. Like, so SMCI, we know it might possibly top. GCT is still running. Nvidia, could still run on the earnings. Palantir is still doing okay. So these are the ones that are still doing okay. But as you move down the list, I think, like, again, it's starting to see a lot of negative action. So I haven't gone through the whole list, but I think it'll be, there's still, again, there's some newer names, like, but they're less liquid and they're more lagged kind of thing. I know Pega also report good earnings, but just the older names, like, follow the crowd, follow the Mondays, like, see how they're doing, follow Shopify. If those guys start to, fall apart, then that's a really big sign that there's a high chance. So this one looks okay. It's more in the top of the range on the weekly. But yeah, a lot of them, just watch where they are. Again, market doesn't go down or up in straight line. It will kind of be very volatile. Like even MDB hit new low this week. ANET, let's look at ANET. Again, I was disappointed with ANET earnings action. There was barely any movement. It closed at the bottom of the week. Look at that. So it's just not good. Like ServiceNow, like these are the institution favorites. Look at it, where it closed. Look at that at the bottom of the week. So all these stocks are starting to I'm very concerned now, right? Like these are the leaders for since January, and now they're just like starting to, really not doing much. Salesforce, okay, this one's still okay looking. Like I say, we'll see what's happening, but it's just starting to look like Microsoft, even Microsoft. Probably that's one of the, like, I didn't like how it react on earnings, and I also didn't like how it react after the earnings. So yeah, again, none of these stocks here on this list, like we talk about Google, like just really starting to don't look good, right? I mean, there's still some of them standing up, and then there's some laggers coming up, but those are only the reason why they're moving is because their earnings are better than expected. So we can't just rely on earnings, and that's why I keep asking myself, what is the catalyst going forward? And if after they jump on earnings, what else could it be, right? I think because they run up, the ones that did jump, even including the ones that I hold this week, App Living and Frog, I think it's hard for them to continue that run, right? Without doing some sort of base formation, and that's the thing that I would recommend. Like, so I'm lighter on the stock side now. The ones that I'm holding, again, they're not like like I said, Lily, NBO, those are heavy favorites, institution favorites. But most of the stocks that I'm holding, like even SKWD, let's look at that one. Like, you know, I bought into this. Again, most of them because of earnings, and they're in the base, right? So that's the only, you know, again, you gotta go back to the basic. Buy stocks coming out of base on high volume or something. So this is moving up nicely. Hasn't even broke out yet. You know, stuff like that. Like I'll take, you know, try it out, see if this rotation is happening to the smaller caps. But other than that, like a lot of the older names are starting to look toppy, right? So that's where, you know, and those are the, you know, see, these are the higher rating ones. But if I go down to the lower rating ones, relative strength wise, those are the ones that I got into Disney again. Like, you know, I'm not saying like they won't work. I'm just saying it worries me that these guys are starting to move up, right? So this is moving up nicely now. So, but these are all the laggards. These are the guys that are, you know, from the bottom of the heap. Like, I mean, they're not the worst of the worst, but it's, you know, so, like, yeah. So that's why I'm like, kind of have to stop myself and say, hey, going forward, can these guys that are not the strong, like the leaders, can they take over the leadership? I doubt it, but that's just my take on it. So I have to like kind of take a step back and look at this from a bigger picture. And if the market does top, like if the Nasdaq truly has top, we will see much bigger pullback going forward. And whether these smaller caps will hold, we'll see. Russell versus Nasdaq. That's a big debate right now. Until next week, I guess.